Hey everyone, Michael here. So in this video, we're going to go over the ownership section of the company report. And just like the others, we'll go into the metrics that we check and why we check them. But as you'll notice, for the management and ownership sections, we don't have 6 metrics that we check. And that's because these sections, ownership and management, don't contribute to the snowflake for a company. So the snowflake is made up of, as you know, the value, dividend, health, past, and future. And the reason these 2 sections, ownership and management, aren't in the snowflake is because they're much more qualitative analysis, whereas those sections are much more quantitative, where they rely on financial metrics and financial data from the company's annual reports and analyst estimates. These 2 sections here, while they do have some financial metrics like insiders' amounts of holdings and their details about management and stuff, it's much more qualitative analysis. So with that being said, why is it so important to assess a company's ownership? Well, it's very important, like we see here, to know who the major shareholders are and whether or not they've been buying or selling. So why is it so important to know those 2 features? Well, if you know who the major shareholders are, you know then who has influence over the company. So if there's a particular group of shareholders that own more than half the stock, then they typically have a lot of say when it comes to votes that happen in the company's AGMs and stuff. So by knowing that, or if, for example, there's like an insider who has like a 20% stake in the company, you know that that particular insider has a lot of skin in the game, and so they've got a bit large incentive to do the right thing. So it's important to know who those major shareholders are because they can influence the outcomes of the business's voting decisions. And in regards to the insiders buying and selling, it's important to know this sort of information because it gives us some insights into how optimistic or pessimistic insiders are in regards to the company. Now, it's not a strong signal in terms of like if you see buying, you should buy, and if you see selling, you should sell. It's a weak signal in the sense that it's just a trigger for you to do some more dig deeper. So, with that in mind, I'll show you how we should analyze this first part. So, this here is basically displaying to us the insider trading volume, showing us all the buying and selling that has happened from insiders and major shareholders over the last 12 months. And the main thing we check for here is if there's been insider buying over the last 3 months. And if there has been, it gets a tick, but if there hasn't, then obviously it doesn't pass that check. So the major trend you want to look for here is basically if there's any clear underlying trend of optimism or pessimism from a large number of people. So what I say you would want to keep an eye out for is if there's been lots of large amounts of selling from multiple different insiders across the period of the year or even recently, or on the other side of that, if there's been lots of buying from multiple different insiders over the course of the last 3 months to a year. So the reason why I say that is because say, for example, there's a one-off sale of like a couple of $100,000 from one individual. It's like that isn't the strongest signal that like things are going south at the business, right? It's like one individual person. There's not too much context to gain from that. It's without looking into or knowing personally why the person was selling, it's hard to take away much from that about the business's prospects. However, if you saw like an underlying trend where there was multiple different insiders who were selling like greater than 5 or 10 or 15% of their holdings over the course of the last year, then the fact that so many different people are selling such large portions of their holding, that could be a big signal of like, okay, all of these insiders are offloading their shares. Why? And that's a signal that you have to look into it further and see if there's any underlying reason why. So that's what I mean by looking for like a large trend. And on the same thing on the buying side, right? So if you see an individual buy a small amount of shares, then that isn't much in terms of a dollar value. It's a good signal, but it's weak, right? It's not too much of a without much context about why they were buying. It's not really that strong because it's only a one-off sort of purchase. However, if you saw a large trend of like multiple different insiders buying large amounts of holdings, like they were increasing their stakes by 5, 10, 15, 20, even more percent, and you saw multiple people doing it, that's a pretty optimistic signal, right? It's like, okay, wow, all these insiders are loading up on stock and increasing their exposure to the business. Maybe I should too. So it's not like saying if you see that, buy shares. It's more like if you see that, keep looking into the business and try and find why they too are optimistic on the stock. Because basically the general consensus is that if someone is an insider or they have being a large shareholder, then they know the business incredibly well and they have reason to to act, be it buy or selling, off like information that's on the underlying business. So that's what I mean by looking for underlying trends here. And so this chart here can be very valuable in terms of just giving you a high-level overview of whether insiders are optimistic or pessimistic on the stock, and it's important to look for like large trends. So the next section we do here is basically a breakdown of those recent insider transactions you just saw above. So everything you just saw above, but more detail. So we show you the date. This is the filing date that the transactions occurred. We show you the dollar value, the person, what type of entity they were, if they're an individual or a business or a company, and then their role in the business, and then how many shares and the maximum price that they sold their stock for. So the reason why we show you this is just to give you more detail for what you're seeing above, because as you saw, it's like in the last 3 months, we saw that there was 6 individuals who sold a total of $85 million worth of stock and 270,000 shares, 75,000 shares. It's like, okay, let's get a breakdown of that. And so you look at this chart here and you can see all these individuals who did sell their stock. And one thing I would keep in mind is that there's sometimes more color that can be understood from these kind of trades by looking at the actual filings that occur with the exchange. So you can look at the company's investor relations page, and if you want to get more details on the particular filings of these trades, you can go and find them and then just read the details. Sometimes they include a bit of context about why the person was selling and a particular reason. It could be like it was a predetermined part of their compensation plan where they received stock and they just sold it immediately, or it could be whatever reason. They sometimes tend to include a bit of a description. So if you want more context on these, you can go and find them there. But at a high level, this is very interesting to know just who exactly was selling, how often, and like I said, it just provides more detail to those sort of trends and sales and purchases you were seeing above. So the next part we do is the ownership breakdown, basically showing you who owns what stock and how much of it. So what we can see here is, so the next part we look at is the ownership breakdown, and we want to have a look at basically who owns what stock, and who owns how much of the stock, and who basically has the most influence. So here we have a breakdown of all the different types of shareholders. So institutions, general public, individual insiders, and all these other entities here. Basically, this is to give you an idea of who has the most influence. And so typically bigger companies have large amounts of their shareholder base made up of institutions, because institutions can typically only invest in really big companies, right? They have mandates that only allow them sometimes, for example, to invest in companies that are like over $100 million, for example. So in small cap companies, you might see that the share registry is a bit different. And then with big companies, because there's sometimes funds that invest in index funds and these passive investment sort of vehicles, they could be made up of a lot of institutions. So by just knowing the breakdown, you basically get an idea of who has the most say when it comes to voting at the AGM or sort of influence over the stock. So if these people were to change their mind for whatever reason, like sentiment was to change or institutions were to change their thesis on a stock or whatever, and say they all wanted to start buying more or selling more, this can tell you already how much exposure they have, and then like how that could like push the price higher or lower. So yeah, it's very interesting to find out the breakdown. And so we can see in this case that the general public has about a third or just under a third of the voting power, and institutions made up of many funds have like more than 2/3 of the voting power. So that tells you right there that they have a lot of say. And the check that we do here is in regards to dilution of shares. So basically we want to see if any more shares outstanding, as in the amount of slices in the pie, we want to see if there's been any significant increase in the amount of shares outstanding. Why do we want to look at that? Because ultimately, if you're a shareholder right now and the company decides to issue more shares, and you don't purchase any more shares, your slice of the pie, as in your ownership over that company, your ownership percentage decreases because there's more slices out there now. So the reason why a company might issue more shares is either A, they're looking to finance like a new project, and they can choose to do it between raising debt to fund it, or they can choose to issue new equity and issue shares, which dilutes existing shareholders. So if they do that, this would be noted here, and if there's been a significant dilution, then it'll be noted. And the other thing is if the company chooses to have significant compensation for its staff through stock options. So if they issue equity to their staff, and that just is increasing the amount of shares outstanding, and it does so in a significant way, then shareholders are diluted, and that's pretty impactful and can basically have a negative impact on your shares. So we want to have a check for that, and it's important to know because basically you can provide context on whether you're being diluted or not and if your shareholding ownership is staying the same. And so the very last part we have here is basically just a breakdown of the top shareholders. So like you saw above, we showed you the ownership breakdown at a high level, and this gives you the much more granular detail on who exactly the shareholders are. So we can see here that the top 25 shareholders own about 42% of the company, and so that's a pretty good sign because it's a diversified amount of shareholders that own just under half of the company. So it's good to see that there's no one in particular shareholder that has like the most say. It's a pretty broad range. So it's like basically if any votes were to happen, it would be like it has to have like consensus agree, like a lot of shareholders have to agree with a particular vote. So that's good to see. And the main thing I would say to take away from this table is you just basically want to get an idea of who exactly these shareholders are. And in this case, these are all the institutions that we saw above. This is a breakdown of all of them, how much they own of the stock. And this just gives you more details on the shares and the current value. But a really key takeaway is to look at the change. So this is the amount of shares bought or sold by that particular shareholder over the last 2 reporting periods and how much this stock makes up as a percentage of their total stock portfolio. And you want to keep an eye on and just basically see if there's been any large changes here. So I mean, if there's been any like sales of like, 5%, 10%, 15%, any big sort of movements in how much they own in the stock. So if they've been loading up heaps on stock, you could be like, oh wow, this particular shareholder is very bullish on the stock. They've increased their exposure. Or if someone, and like for this is at 7.2%, they've increased their exposure to the stock. Alternatively, if someone's unloaded heaps of stock, like they've decreased their holding by like 10, 15, 20%, then that could be like, okay, this institution has decided to sell, or this shareholder, I should say, has decided to sell. That's interesting. Why? Because they've done a lot of research. These typically institutions have a lot of manpower dedicated to like analyzing these stocks, and it's just like a signal of, okay, these people have decided, they have a new thesis on the stock. I wonder why. And then like when you go and do your own sort of more qualitative research in your due diligence, trying to find out maybe why they think that or what their thesis could be. So yeah, just my suggestion is with this area, changes, keep an eye on if there's any large recent changes in the last 2 reporting periods, because that can give you a signal of like who's become bearish or who's become bullish. So yeah, this is pretty much the ownership section of the company report. I hope this video has been helpful, and thank you so much for watching.